this week in the stock market is going to be absolutely insane. And that is because we have the Fed minutes. And what the Fed minutes are likely to say is probably some not so good things. Essentially, if you guys are unfamiliar with what the Fed minutes are, it's not any Fed speakers. It's essentially a report of what was said at the last Fed meeting and gives you a little bit more clarity on why they did what they did. Now, obviously, at the last Fed meeting, they raised by 75 basis points, but they did indicate that they're probably going to have to go higher with interest rates and keep them there for longer, but they want to slow the pace of how they get there. So that's a little bit bullish, but higher for longer is not bullish. And that's the last thing the markets wanted to hear. And that's why you sold off after the last Fed meeting. Now, a lot of people are forecasting for this FOMC minutes to project a lot higher rates. Like you're talking 6+. Fed Bullard said 7% rates. And that, my friends, is not priced into the markets. And that could be a very negative factor on this week. Because as we know, Fed speakers, they have really been talking down this market. Fed speakers have done whatever they can to get the stock market to go down over the last week. And that might, climax, for lack of a better word, coming with the Fed minutes. And that could be the drop off a cliff the Fed has been hoping for, guys. So let's get into that situation as well as AMC, what I kind of expect as far as this upcoming week and what the data is telling us. So let's get straight into it, guys. AMC on Friday closed up 2.71% after having a very back and forth kind of week. We did show a lot of support, and it looks like to me this rally is being all but confirmed as of last week. You can see we are really finding a lot of support at the 50-day moving average, and that is this purple line right here. You're literally bouncing right off of it. Historically speaking, when that happens, AMC tends to go parabolic and rally anywhere from 50 to 200, 300% after you hold support at the 50-day moving average. Really, there hasn't been much of a time that we didn't rally 50 to 300% when we held the 50-day moving average, besides right here. And you only seen, let's go ahead and actually pull it up. You only seen about a 13% rally after holding the 50-day moving average. But every other time, as you guys know, back January of 2021, that was a 1,000% rally, another 1,000% rally in June. This was all after holding support at this purple line, this 50-day moving average, for multiple trading sessions. And, same thing back here, rallied about 50%. This was one of the smaller rallies back here in August of 2021. And then you get into March of 2022, that was a well over 100% rally. And then the last rally that we did see back in August, again, well over a 100% rally. And we are back in the same scenario here. And it took us a lot to actually get up to the 50-day moving average, but that typically does happen. It typically does take a decent rally to get us up to that 50-day moving average, and then to really start to go parabolic after that is what always seems to happen. So if we actually can follow that same trend, then you're in for likely, call it average 100% rally from here. That's going to be pretty good. That's going to put us back roughly to about $18 per share. $15 to $18 per share, depending on what happens on Monday. Now, let's talk about what's going to be happening in this upcoming week. And we do have durable goods orders, which will be coming out on, I believe this is Wednesday at 9:30 in the morning. So that's going to be your first bit of news on Wednesday that could move the markets quite a lot. And then you have new home sales at 11 a.m. on Wednesday as well. And then you're going to have the Fed minutes at 3 p.m. on Wednesday. Also, I do believe for whatever reason this is still behind an hour. So I believe it does come out at 2 p.m. Could be wrong there, but they typically come out at 2 p.m. And the FOMC minutes, that's going to be really the thing where the Fed, I believe, hawks down in the markets and really gives us more of a solid number as far as where the Fed wants to go, where interest rates are going to go, and how long they are potentially going to stay there. Now, this article says the Fed minutes may deliver a massive blow to the stock market. The summary: the November Fed minutes will be released Wednesday afternoon. The bond and currency markets are already preparing for very hawkish minutes. Fed board members appear to think rates may head towards 5%. Looking for a helping hand in the markets? That's a promotion. We don't need that promotion over here on this channel. We got enough promotions by telling you to hit that like button and subscribe to the channel. And if you guys want to come trade with me live in real time as well, link down below in the description of this video. That is a premium product. If you are not serious about what you do, do not join that community. Nonetheless, let's get into this article a little bit more. It says it will be a holiday shortened trading week, but it will not be short on news events. The massive news event will come on Wednesday at 2 p.m. with the release of the November Fed minutes. These minutes will likely reverse the equity market celebration following a lower than expected October CPI report, as the Fed has a different view and is already pushing back hard. Since the release of that CPI report on November 10th, Fed speak has been crystal clear. Slower rate hikes do not mean a lower terminal rate, and one better than expected CPI report isn't going to change the path of monetary policy. Ultimately, these speakers seem to think rates are going even higher. St. Louis Fed Governor James Bullard suggested dovish assumptions about monetary policy justified additional rate hikes, and he talked about a 7% federal funds rate could be on the table. Now, it says the November FOMC statement indicated the likelihood of a slower pace of rate hikes coming, while the FOMC press conference indicated that the terminal rate was likely to be higher than previously expected in September. Since the FOMC meeting, a strong case has been laid out by many FOMC members for the overnight rate to head over 5% and potentially go as high as 5.25% in 2023. And that's where things get a little bit crazy, because if the Fed minutes indicate the rate should go a lot higher than 5%, well, a lot higher than 5%, you're pushing 6-7% possibly, and that's not priced into the markets. That would mean new lows for 2022, and you're up quite a bit from there. So keep in mind, that is something that would not be a positive thing for the equity markets. Now, it says, if this message of higher rates is correctly delivered in the FOMC minutes, then it seems more likely than not the equity market rally since the October CPI report in mid-November should not only pause, but reverse. And I'm kind of in line with that as well, just because of all the Fed speakers that we have gotten over the past week and how hawkish they have become. Now, if we take a more direct look at AMC, that doesn't necessarily mean AMC has to go down in the same way the markets actually went down, because on Friday the markets were down quite a bit at one point, and AMC did very well, closing up 2.71%. You're probably not going to see these stellar, huge, 40% days, 30% days, 20% days when the markets are down big, but that doesn't mean you have to go negative on a day-to-day basis with AMC stock, especially how we have traded over the past, week now, 2 weeks now. It has been exceptionally on the bullish side. Now, let's get into some of the other data that you need to know with AMC. But first, I don't want to leave this out of this video. You do have a couple earnings that could be worth paying attention to. First one, Monday after hours, you have Zoom and Dell, which will be reporting earnings. Tuesday pre-market, you have Best Buy, Dollar Tree, Dick's Sporting Goods, and that's probably going to be it. Burlington, Jack in the Box, Abercrombie and Fitch. Some of those could be some bigger moving kind of stocks. You have HP and Guess Tuesday after hours, and then Wednesday pre-market you have John Deere. That's the only one that even makes sense to talk about for Wednesday, and that's going to wrap up earnings season, guys. And earnings season was a lot better than what people feared, which typically tends to be the case, at least for 2022. But the higher rates go, the more people are going to expect lower earnings. And statistically, historically speaking, the lower these stock prices will have to go. Again, not necessarily AMC itself. Now, let's get into the Ortex data. So as far as the Ortex data and where we currently sit right now, 20.1% of the flow is currently sold short, about 103.63 million shares that are still sold short. And you are seeing a cost to borrow minimum of 37.33%, which is very high relative to what we have historically seen on AMC over the past couple of months now, or really in 2022 in general. Cost to borrow numbers, on the minimum side, don't tend to go over, 10, 15, 20%. Cost to borrow max sitting at 83.5% and cost to borrow average at 53.7%. People are actively taking out shares of AMC at 44+%. At some points it's 60%, at some points it's 90%, at some points it's topping over 100%. So that in and of itself is very bullish, because as you guys know, a lot of these positions that they take out, they can be adjustable rate. So as the cost of borrow rates go higher, it puts more pressure on shorts that have already took out those short positions. As far as option activity over the past week, you have seen 145 orders totaling $9.28 million, positive order value of 24%. So again, not too bullish as far as that. As far as the rest of this week, you are going to have 67.73% of the open interest weighted to the call side and 32.27% weighted to the put side. So it looks like there's a lot more calls that are on the option chain than puts, which is not really a big shocker since we have rallied so much, right? I would hope that there's more calls on the option chain than puts. And if you look at the total open interest numbers that we're looking at heading into next week, you have about 15,000 calls that are currently in the money, 70,000 calls that are out of the money. But keep in mind, you had 41,000 calls expire in the money and 181,500 that expired out of the money for last week, and a combined about 120,000 puts that expired overall last week. So we're not going to get these numbers updating for this current week based off of the people that rolled over these options for this next week. So in other words, tomorrow morning, you're going to see this update and these numbers are going to be substantially higher, right? So take it with a grain of salt right now. There is a lot of option activity. There's a lot of people trading these options and the numbers will go higher. But for right now, you have about 15,000 calls that are in the money for this next upcoming week. And you have 70,000 that are out of the money. And you do have 10,000 puts that are in the money and 31,000 puts that are out of the money. But again, we'll have to wait until these numbers do start to update. And that will be tomorrow morning, probably early in the morning, these numbers will update. Now, as far as what the markets are pricing in with the Fed and the December rate hike, 24.2% of market participants are still expecting a 75 basis point rate hike. So that could be another bullish case if the markets firmly start to price in that 50 basis point rate hike after the FOMC minutes. That could be seen as a little bit of a bullish thing. But you want to watch and keep this in mind, higher for longer. Whenever they say higher for longer, that's probably going to spell some downside for the stock market. But specifically, people want to know what that number is going to be. So if they're talking about a 6 or 7% federal funds rate on the FOMC minutes, that's probably going to cause some huge downside. So don't be surprised when that comes out on Wednesday if you do get that big downside. Now, 75.8% of market participants are still expecting a 50 basis point rate hike, which is still in line with kind of what we've heard from Fed speakers. It's pretty unanimous that they want to step down from 75 basis points and go down to 50 basis points. But you will just have to see with the minutes. That's going to get a little bit crazy. But as far as AMC, until we break under the 50-day moving average, I have no choice but to be bullish here and have no choice but to follow the historical trend of AMC. And really, what I'm thinking from here is that AMC could rally at minimum 50%, more likely 100%, less likely to go, multi-hundreds of percents as of right now until we get the shorts actually covering. Once the shorts cover, you're talking in the thousands of percents. But how I would trade this and how I'm going to trade this is I'm going to go in on a position on Monday. But if AMC closes under the 50-day moving average, I'm cutting losses at that point. That's it. all of this is really going to ride on the historical trend and the historical performance of AMC breaking above and going substantially higher above the 50-day moving average once we find support above that moving average, which we are firmly doing as of right now. So on a risk to reward basis, I think it looks really good. If it does go under the 50-day moving average, then you could see some more downside, and that would be something that I am paying the absolute most attention to. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already. What are you waiting for, baby? It is free 99. Like I said, if you guys want to come trade with me live in real time as well, link down below in the description of this video. And if you guys have not gotten your free stocks with Webull, Moomoo, and Public, links also down below in the description of this video. It is free money, so take full advantage of it. Thank you for watching. Most importantly, enjoy the rest of your day, and I will see you in the next one.